DTI. What is DTI? Your debt to income ratio is one of the most commonly talked about ratios in mortgage lending. You're probably wondering what makes up the DTI. In this video, I'm going to be explaining how the DTI is calculated and why it's so important for us as a mortgage lender to figure that out for you. If this is the first time that you're watching my channel, my name is Seanu Uyehara, sales manager with Loan Depot, helping you finance your homes all across America, whether you're thinking of purchasing, refinancing, buying your first house, a vacation home, or even if you're an investor looking to build your portfolio. We've got you covered all across America. And don't forget, you can hit the description below. There's links to more information on how to get your mortgage right. Now, DTI, or your debt to income ratio, like I mentioned, is one of the most important ratios that we look at as a mortgage lender. We need to figure out how much house you can truly qualify for. Every mortgage product out there has a certain limit on their DTI, whether you're looking at an FHA loan, a VA loan, or a conventional loan, or even a jumbo loan. The loan officer's job is to know what the maximum is, so that way they can properly qualify you for your mortgage. Let me introduce you to Carlos. Carlos is a client that's looking to purchase a house. He's making $10,000 a month in gross income. That's also one thing to also keep in mind when calculating your DTI. Mortgage lenders use your gross income, which means the income before you get taxed. However, if you're self-employed, we're gonna look at the net income. So after all your write-offs and expenses, that's what the lender looks at to qualify you. Now make sure you make a note of that. Carlos is looking to buy a house, and when we do the application, we're looking at the credit report for Carlos. The one thing we look at is all the minimum payments that show up on the credit report. I've had many clients in the past think that we look at the overall debt that's on the credit report, which is false. Let's say Carlos has a credit card for $3,000. All we really look at is what is the minimum payment? And that minimum payment could be $50 a month. And if that's all it is, then that's what we're accounting for when we calculate his DTI. So looking at Carlos's credit report, he's got about $2,000 worth of monthly debt, which includes a car loan, a student loan, an installment loan that maybe he financed a TV with Best Buy, and anything else that could show up on a credit report, we will factor in, and all those minimum payments tally up to $2,000. Now, based on his income, we are currently at a 20% DTI. Now again, certain programs will allow you to go higher than others. For example, FHA financing, you can actually exceed 50% on your debt to income ratio. Now, the other part that makes up the DTI is going to be the future mortgage payment. So let's say Carlos's new mortgage is going to be $2,000 a month. So as a lender, we're going to take his monthly consumer debt plus the new mortgage payment of $2,000. So we have a combined total of $4,000. Divide that by his $10,000 a month gross income. We're at a 40% DTI. That's a good ratio. He should be able to qualify, assuming he meets all the other requirements to purchase a house. The reason why the pre-approval is so important, because I've talked to many clients recently that they try to figure out the DTI before they give us a call. There's so many times that you could be calculating your numbers wrong. And every month that you're waiting on the sideline thinking that you're doing the right thing by either paying down or paying off a credit card, you could have actually been in a home. And if you've looked at the housing market over the last several years, every single month that you're waiting is literally costing you tens of thousands of dollars as home prices continue to go up. So I always recommend getting with a lender, because this is our job. It's my job to help you figure out what you can qualify for. So don't feel that you're wasting anybody's time. We want to make sure that even if you can't qualify for a home today, we give you the roadmap to be able to show you what needs to take place in order for you to purchase your home. Now, if you're on the sidelines still trying to calculate your DTI at home, throw that calculator to the side, give me a call. I'd be happy to get your application started. In fact, there's a link below in the description where you can start your application online, and we can figure out how much house you can qualify for. And if you still have questions, don't forget, you can always check out this playlist and learn more information on how to get your mortgage right. My name is Seanu Uyehara. I'll see you in the next video.